S&P held a key level. Nasdaq held up perfectly, setting up a new pattern. Amazon's breaking out on news about their AI strategy. We're starting to see winners and losers in the AI semi-space. SMCI is trying to form a bottom, but rejects at a key level. This one sector in the S&P is outperforming the Nasdaq. Tesla shakes off bad news and sets up a very particular pattern. We're going to go over that and several others. There's a lot to cover, so let's get to it. Hey everybody, welcome back. So in today's video, what I want to do is just go over exactly what's going on here. So we're going to start with the S&P. This is really textbook stuff. We've gone over it several times in the candlestick videos and the educational videos. You can always look those up in the previous videos. But see this right here, 1, 2, 3, and then that flip. So what this is setting up, and now we're going to get rid of this right here, is you're setting up a bullish hook reversal. It couldn't get any clearer. Now, just for sake, so everybody understands this, I'm using a 12 SMA open, high, low, close. Okay, so that if your lines look a little different than mine, that's what I'm using right now. There's several reasons why I'm using that specificity. I can do a whole video on it, but for now, what we're going to do is just focus on what's happening. So here we are, we're trying to approach that level and we're having a hard time. We get to the 70 and then we're starting to slow down. Now, if we drill into this on the hourly before I begin, and I don't use the 12 on the hourly, but for our sake, we're going to leave it in. The one thing that I was pointing out, and please make sure that you subscribe to this channel. On Saturday, I'm going to walk through a classic example of a live trade in Saturday's video of how to use RSI effectively. Okay, I can show you live how you can literally call a bottom, right? Where you have the potential for a bottom. It's not 100%, nothing is. But you can see this divergence right here, and it is crystal clear. And we saw it this morning. And we talked about it this morning on our live call. So it was pretty clear to me that this was setting up for a divergence. And when you saw it, the way we acted at 9 o'clock, we moved, okay? They don't care about interest rates anymore. I don't know how many times people are going to have to say that what Powell has to say is no longer relevant, okay? Unless he's going to go out there and change the 50 basis points, it's already baked in. And we already know that this is already baked in. In front of us is target rate probabilities for July 26th meeting. Okay, there is a 77% chance now that they're going to raise rates. Nothing he did today changed that. So you see the 525 to 550. You can see the probabilities and the associations up here of a 77% hike or at 23.1% no change, right? And this is on the 23rd. Now, if we click up here, and this is Fed Watch tool on CME Group, and it's free. Now, if you look at that level, they're saying by September, we're either going to be standing pat or we're going to raise again, or we might even cut. We don't know, right? So, and they're saying, well, it might not be an ease. Well, if he raises and then cuts, well, then it would be. But you just don't know what they do, right? You go out to November, and what do you start seeing? Okay, you see that there's no change. But they're saying from today's date that you should still see a hike. Then you go out to December and you're slanted this way, and we start saying, well, we might ease, right? So you're seeing the slant, and I just want to point something out that's very, very obvious. This really did not change today. Nothing about this changed. So his statement over the past 2 days did nothing new to affect the market, and I think that's very important. I always like to look at the market, and I explain this pretty simply as you have a stool right here, and we're going to do my stool example for those that are new. And you have this branch right here, which is really your macro. And then you have this branch right here, trying to get better with my drawings, guys. So, and then you have that branch right there, which is fundamental analysis, which is becoming more important. And then you have this branch right here, which is technical analysis. When you sit on a stool, you shift. No different with trading. We were looking at macro, and everybody was worried. The Fed, CPI, jobless claims, housing starts. Now it's fundamental research, and we're going to explain how to do that in a little bit here and why that's so important when you see a couple of these moves. Stocks that are breaking out versus stocks that are not breaking out, and we're going to explain how to start drilling into this. So if you start seeing ES here and you start to see how we're turning, we are starting to turn. Now, one of the things that I showed everyone the other day is a system that I created, and it's not rocket science, but it's proprietary. I'm trying to kind of keep it that way. But what you're seeing here is the clouds and the cloud formations and the turns of the clouds, and it tells me where I need to be and what's going on. And the one thing that I would just take away from this for the people that have been watching for a period of time is if we drill into these clouds and we look at the ES on an hourly basis, the last time that we turned bearish was back here. And then that bearish signal goes away by your first lead when the first cloud starts to turn from the lime green to the purple, right? That's when you get your first short-term buy indicator. It's not a buy signal, but it's a buy indicator. Now, one of the key things I stated that happened was the ES, this is a 20 EMA on the hourly, and when we broke that 44.68, we wrote it down the entire time, and you should be able to see that. To make it even clearer, we're going to really drill into this and pay attention because the devil's in the details right now. So if you take this out, say, okay, when did we turn? Around 9 o'clock today, right? And then we flipped it around 12 o'clock, right? So you can see what's happening here, right? And what did you do since then? You never closed below it. And since then, if you start getting into the cloud formations, here's your short-term cloud. What happened once we got above that? Well, this cloud turned purple. All right, so now I have a second indicator, and note how that purple cloud is riding all the way up. We never really closed in that purple cloud. And then you start going, okay, well, what are we doing with the long-term indicator now? And then you realize that they're here. Now, I'm going to just give everyone a little advice, and I watch this religiously because it does work for my style of trading. It might not work for you. But when these all start converging and flipping at the same point, you want to pay attention. I have no idea what happens tomorrow. Nobody does. But when I see a data point like that, it is very rare that we're just going to automatically roll back around. It takes time to develop. Just like this took time to develop, right? When we started to crack up here, I didn't know that this would flip here. I didn't know how long we'd stay below the 20. All I know is that's what it's doing. So that lets me say, hey, just stay out of the way. There's no reason to go near it. Whereas if I start looking here at how we're doing and that flip, well, that would mean to me that if I wanted to be long the market and the market does gap down tomorrow, I might still be a buyer. All right, that's the indicator that I would utilize. And that indicator and understanding where we're at and how we acted today allowed us to play some names fairly well and not be too crazy about it. And I'll get into a couple. But I think that's a really important distinction. So the question is, what do you do now? Well, understand that that indicator has flipped. So what I would do is I would just look at some very key levels and watch these key levels tomorrow. You don't have a higher high yet, you need one. So the very first thing we're going to want to see is 44.30.25. If we can get through 44.30.25, then we can start talking about this ski slope and saying that, you know what, maybe we're finally going to get through that. But before you can get through any kind of DTL, you really need to make a higher high. Even if you put this here and say, well, I want to be super technical and we're going to use that. Okay, you still need to make the higher high. No matter how you look at it, you need to get above that 44.30, and that should be your key level. Overall, I like the action that we're seeing. I think it was very positive what happened today. I would suggest to everyone that you might just want to overlay a 12 and just see how it acts. Now, this particular pattern, again, bullish hook reversal. What you're looking for is to flip that daily. The high of that daily was 44.27. That coincides perfectly with the 44.30 level we were just talking about. So I would watch that level very closely. If you look at the Nasdaq, it's actually up after hours. 1, 2, 3, very different pattern with the undercut here. So let me just show you the difference. Okay, see how we have this hammer and that bar is not dangling under there at all, and you just have a wick there, right? Wicks are what? Price rejection. Very different kind of bar than the shakeout that happened here, okay? This is elongated. This was a bigger shakeout. And then we've come up through this. Now, what does that do? That creates what I refer to as a piercing pattern. Piercing patterns are vicious, and you'll see a couple of them in here. But this is a great example of a piercing pattern. You undercut, and then you get up to 50% of the existing bar, and then you can push. And if you see them here, they work both ways. They'll work both ways. So in other words, if you're here, right, and I'll just give you an example. So you're here and you overcut, and then you're greater than 50% of this existing bar. This would be a bullish engulfing or a bearish engulfing, but it's the same principle. The next bar is usually going to follow and supersede that bar. Okay, that's usually what happens. You can see them. Let me see if I can find another one in here. I'm sure there's plenty of them. You can see it up here, and you can see it right here as well. So when you start to see that, it really does play out. And it is something to pay attention to. And it's higher than a coin toss. Again, what I would be doing with the Nasdaq and what I would be doing on my charts if I was you is I'd be using a 12 open, high, low, close SMA, okay? That's what I would be doing. If you note what's happening here, we're going exactly to that level and we are not breaking. That is a clear sign that they are just working off the overbought condition. And if we drill into this on the hourly, that's exactly all we did today. That's all we did. And here's another key example. And I'm really trying to hammer this home because I know a lot of people are saying, well, if RSI and MACD and they work so well, and these indicators work so well, then these people would use them to manage money. Just, newsflash, the people that created and work with McClellan and work with, and the people that created MACD, they actually manage billions of dollars. So, a lot of people don't know that because they're not very flashy. So there is utilization of these tools in professional trading, despite what you might hear out there through retail, FinTwit, or YouTube. So always check your facts and then look at where they're coming from and then see if that's somebody that you want to emulate or not. So you see how you have these levels in here and how you're flipping and how you're turning, right? And I don't really care about this moving average. Usually, candidly for here, I would use a 9, but I don't really want anything in there. So you can see how we're turning and we're working. There's nothing to do here, guys. Now, are we going to get back to overbought? I would think that you're going to push through overbought at this point and get a little higher. Now, I don't know that that's going to be the case or not, but if I had to lean one way, that's the way that I would lean. Let me make this a little bit bigger. It's going to bother me. There we go. So that's what I would focus on, and I would focus on that level. It's really important that you watch what's going on here. Okay, because all they're doing is shaking people out, right? We refer to it as the shake and bake. I'll give you a great example that we did exceptionally well with today, and I'm sure others did as well, but I'll just walk you through this trade. It was just an absolute, to me, it was just an absolute like layup trade. So here's the RSI, just FYI, and I may actually do a video on this. So just so we're clear on a couple things, right? I'm going to be really clear about something. It was very clear that that was probably it, that we were probably not going to continue to drop, okay? For reading on an RSI, whether or not you are a 1 or whatever you are, you will be able to go and mark and see how clear it gets that that is a bottom. No matter what happens, you're going to bounce, right? There's going to be some kind of bounce there. Anything when you're in the teens, and I hate to be this cavalier, and I'm going to say, don't do this at home, but anytime that you're down in these levels where you're like a 12 and 8, I mean, those 1 minute orb trades are almost, I've never done a study on it. It might be a fun study to actually do and back test it, but it's got to have a higher degree of probability than 50%. It has to. They are just absolutely glaring. So we let this play around and we make sure that it was going to go before we got involved with it. And then when it ripped, that was it. It was risk on. This was a great setup today and we did exceptionally well with it. I held calls in this, just disclosure, I have calls in this now and I have stock in this now. So as I describe it, I just want to let people know where I stand with it. And we've been playing with this. If you've been following these videos, we've been playing with this all year, candidly, but a lot more recently. And now look what you have. The undercut, right? You have the undercut and you have the reversal. What did everybody say yesterday? How many people were showing this bullish engulfing? This is why it's so important to understand where you are in the pecking order and what's important and what's not, right? Because people are making decisions based upon those legs of a stool and not understanding which leg you're supposed to be leaning on right now, okay? Now, I'm not trying to get too esoteric, but if you think about it from that perspective, it'll make a lot of sense. In other words, people are worried about CPI. CPI is dead. Okay, Goldman had an article out, I'll get into it Saturday, but they have an article out that if car prices stay stagnant, CPI could drop 20 basis points. That's absolutely insane. It would have been cut in half last report. It's an absolutely insane statement. So that's not an issue for funds anymore. They're not looking at that. We always want to look at what funds are looking at because they have more money than us. We want to get in front of them before they move, or at least track them. So if you take a look at what happened here today, I'll show you one that they clearly are buying. But if you look at what happened here today, we came right to this level. And what level is that? That is the 12 SMA. I know it says EMA, but it's SMA. 12 open, high, low, close. Okay, so keep that in mind. Came right to it, bounced back over. Are we going to flip this level? I think we are, or I wouldn't have stayed long stock. But they made your life very easy, because if you take that out, you probably have a short, because you have not broken that 12, right, since you flipped it back here May 5th. So if I close below that, I'm probably going to want to be out of the way. I would not sleep on this name on pullbacks. This downgrade today was just a way of that guy CYAing himself. Again, I could do a whole video on that. And I do want to say thank you to everybody for sharing this. I can check through the algorithm on YouTube, the sharing. So I really appreciate seeing that people are sharing it, whether it's here or not. So one guy had like 8 followers and shared it, and I got 2 emails for people saying thank you for putting out the content that I am. So you might think that it doesn't matter that you share it, but it does. And I purposely don't run ads so that I don't in the middle of this, so that I don't bore you. And the reason I'm bringing that up is if I ran ads in the middle of this, the YouTube algorithm would actually pick me up more and show it to more people. So I'm just relying on, if I provide value, just please share it. Look at it as a value exchange. I just really want to educate people what it takes to be successful. So much nonsense out there. So you see AMD here, right? What did AMD do? And I saw this yesterday with this technical analyst, and I'm not going to get into all of it again. But these are devil horns is how I refer to them. If you've been following this for a while, that's the technical pattern. When you run up like this, and then especially when one overtakes the other, right? Because that's just the leading flim flam. When this secondary one all of a sudden takes over that one, it is just like the king of flim flam. Here's the undercut of the 12. Then you break down here. If you think about these as horns, and that's a face, then you see the devil horns, and now you're back down here. But this was very clear that you had a problem, okay? And I'll show you the difference between AMD, which is clearly becoming, we're going to say loser, but a rising tide's going to lift all boats. But you see the undercut here? Well, once you undercut here on the RSI, you do have a confirmed negative divergence. So this is not something that I would go near, right? I would not be buying AMD here. Just my personal opinion, okay? I'm not saying that people won't do well with it, but of all the names, this is not the one I would go near. The one that I'm going near and the one that I'm playing, and I played a lot of today, is NVIDIA. I walked through it yesterday. Now, I'm not crazy about today's action in NVIDIA, and I really want to walk through this. But I did see somebody try to explain that this is a negative divergence. You do not have confirmation of a negative divergence until you undercut this. It's that simple. If you undercut this, you have a negative divergence. Right now, you just have a stock that hasn't made a decision yet as far as RSI. And you can get over an 87. It can happen, believe me. We saw it before, and I've seen it for a long period of time. So if you really want to know what trading in this environment's like, I would suggest that you go back and look at the late to mid 90s. Anything after 96. Between 96 and 98 is exactly how we're acting. And we're having these pullbacks, people are getting shaken out, and then we're ripping. It's very different, and you can do extremely well if you have a process that's set up. But I'll get into that in a moment. So if you see this, and I just want to explain why I'm not overly crazy about this, because people will look at that and go, well, you're up. I'm up in a market where the Nasdaq was up 1%, and I'm not up on the day. That doesn't make me feel warm and fuzzy. The other thing is, this was rejection. So let me just blow this up so you can see what I'm talking about here. This was rejection. Wicks are what? Price rejection. So all I did was fill in the wick today. Right? Okay, so that's great, right? That should make me feel good. Well, I couldn't get over the close. So whoever was selling there at the close is still selling, right? Now, maybe it's a market order thing, and maybe we should take a look at Max Pain here for a second and see what's going on at the 430 level. But if we see how we're coming straight across here, I have a problem at 430. I don't want wicks being filled into the downside and unable to fill into the upside. Even though it's green and we did not fall apart, and so that's supposed to make me feel good about myself, it doesn't. And on top of that, I'm flat and the SOXX is up, right? So the SOXX is up, it held. Okay, there's actually a somewhat of a piercing pattern there, not an exact one, but close. And NVIDIA's flat. That's not really a ringing endorsement. Very different action than Tesla today, right? And I want to keep that in mind. So while I'm bullish on this name and I like it long term, I'm very curious as to what it's going to take to get this. Now, this is Max Pain. And what you're seeing here is NVIDIA open interest charts, maturity. And you can see that the amount of open interest right now, and this is as of today, not as of the close of today, is 450. So they make a killing should this go that far, but you go into the strike and you look at volume by chart maturity versus the, open interest maturity, and then you look at what the difference is. I don't know if people remember this or not, so let's just go through it. Open interest is updated every morning on days the market is open. So that has to be updated, right? So this shows you where the volume was today. So if you look at where the volume was today, you see the 420 puts, okay? And then you can see the 430 calls. So that would mean that if that's where the volume is, and that's where the open interest shows on this chart tomorrow, let's say that we skew this way, right? Then what they really want to do is they want those puts to expire. The option market makers are going to want those puts to expire, right? And they're going to want these calls to expire. Okay, so let's go take a look at Max Pain and see if what that's telling us. I'm a little cut off here. I wonder if I can just squeeze this over so you can see these numbers. Okay, so this is the amount of cash that they would actually lose here. And if we look at the Max Pain level, it's exactly where we just thought it was going to be, right? So you're right around there, and you just kind of click in here and you can see this is the amount of money that they're talking about losing in here. So anything in here is where they're going to try to keep it. So that could be why we're at 430, right? They could just be trying to pin us there so that they can get all this money and all this premium. And I mean, I don't blame them. I'd be doing the same exact thing, but that might be why NVIDIA is pinning to that 430. So that's definitely something for us to watch. And that could be why we're seeing what we're seeing here, right? That could be. I mean, that does make sense if you think about it. Now, if we just take a look at SOXL for a moment, I just want to walk through this. I'm going to put a link down below. Maybe it'll be in the description, but it'll definitely be in the pinned comments. So when you comment, click on the link. I walk through. I get asked a lot to walk through trades that we do in the Alpha Chasers community a lot. Yesterday's newsletter, which is free, it's completely free and open to the public. I walk through the exact criteria on how we bought this at $14, and then how we sold a portion at 23, and how we sold a portion over here and made 60% of the trade. I literally walk through every single thing that I use to do that, and you can replicate that. So, and comment below if you read that and you like it and want to see more of that kind of structure, because for me, showing this, the whole goal is to show you what is applicable, right? What can you really do with this data that we're going over, right? Let's stop with all the esoteric stuff and let's get to the actually ability to use this stuff. But let's get into Amazon. So Amazon came out and they're explaining their cloud strategy, and they're doing exceptionally well. I saw this move yesterday, and it did something that I really liked yesterday. And candidly, then the Fed news shook me out of it. I don't really like when the U.S. Attorney's Office goes after a company or FTC or anybody, because it just gives you an overhang. I thought we'd crack here. We did not crack. The day that they cracked it, they came out and issued a statement on how they're going to approach AI. I'm not going to bore everybody with it. What I will say is this. If you go and take a look right here, you'll see a volume spike over relative volume. We are far from overbought. Okay, we could absolutely push higher. This is beautiful, and this is not something that I would sleep on. I would not sleep on this. My hope is that I get a shot tomorrow, some kind of pullback on the option market maker news. Some other things that I would like to go over. Please be aware that Carvana should be very active tomorrow. And once again, you'll notice how it's not what, right? Sitting right there at that 9. Now, if I take this 9 and I go here and I go 1, 2, 3, 4. That's why I like TradingView so much. It's so easy to switch this stuff. And I overlay this. Ever since I got above it, I never even touched it. Never even touched it. This is setting up again, guys. So I don't know if it's going to be KMX's numbers tomorrow that lifts this higher, but I would be watching CVNA and watching how they do today or tomorrow on that news. The other thing I would say to you is that you really need to watch the XLY. And I know everyone's like, you have to watch retail. You need to watch retail. In that one newsletter that I'm saying where I walk through the XOXL trade, XLY, I go through this ELF trade, and this is exactly what's happening, and this is the exact markings that I actually have in that newsletter, and I explain them in there. But the point that I'm getting at here is you had solid earnings, okay, and you were able to buy this at one point with $2 of risk. and now we're up about $13 in it. This is a very easy trade that you don't really have to worry about. I mean, you have to worry about everything, but you're not worried about whether or not NVIDIA is going to drop 10 points, right? It's much easier to trade these. So when you see something like this in that breakout and it's hitting all-time highs, I wouldn't rule it out. The other one, and we were going over this today, here's Race, all-time highs. So these certain retailers are hitting all-time highs, but another one that we bought on the dip was Alta, and I actually put this one in these videos. That's why all these videos are connected, so you want to make sure you subscribe if you look for actionable information. So you see how we are right here coming across, and now you look at your ripping. Okay, you're probably going to gap fill. This probably goes to 475. We're doing fairly well with it. I think we're up $14, $12, something like that. So I like these names and I'd focus on it, but take a look at this. This is fascinating to me. It's actually worse than this historically, so I'm going to get rid of this and this, and I'm showing this because I got asked a lot to show XLY and XLP and how I use that. I'm going to show you that in a moment, but let's get rid of this moving average so we don't confuse. But what's really important here, what I think is important, is that if you look at this relative performance and you realize that you are at, and when you see this, it's absolutely staggering. Let's just jump right to it and pull this back. So we only go back 20 years because that's all the ETFs go back. But if you draw this line from here, and you just see where your median is, right? And you can also just do your median this way. Just do the fib and do my median that way. So you can kind of see where the 50% line is, right? So let me just show you that. That's 50, all right? So you can see where your median line is, and you can see how far off you are. You have so much further that you dropped back here during .com, but you have different types of companies now. This is insanely low. I mean, you're really at 20-year valuations here. 20 years of valuations of underperformance of consumer names versus the Nasdaq. It's absolutely insane what's happening here. Historically, if you go back and look at where hedge funds are right now, they're at 40-year lows in regards to retail exposure. There's no way that that lasts. There's just no way. And I think we started to see that today with Amazon, and I think we've been seeing it. I think they're slowly buying certain retail names. The other thing that I've been showing, and I should probably show you this first. Let's stay on this for a second, and let's go to this on the daily. So this is a 1-minute chart. Now, the 1 minute I'm showing for a reason, because it's just going to show you how we did over the course of a week on this. So if you go back to the 15th, and I just showed you a chart where you aren't seeing any outperformance at all, right? You're seeing complete underperformance. Look how you've done since last Wednesday. You're outperforming. Retail names are outperforming the Nasdaq. If someone was supposed to tell you, do you think the Nasdaq's up or retail's up? It's retail, which is kind of crazy if you think about it. But it's happening, and I would not rule out retail names. I'd start looking at the specialty retail names. XLY, XLP, this tells you your wants versus your needs. And what we've had for a very long period of time, and what we could even do here as well, is you just take a fit level from me, and I just go peak to trough. And it tells you where your median line is. Isn't that convenient? Fits right where you are right now, right? So it looks to me like we're getting ready to flip. And all I did is I'm taking the median line of the relative performance of our wants versus our needs, discretionary versus staples, right? Simple enough. I can actually get rid of this and just pop it up here for time's sake. Well, let's move it a little higher so it doesn't get confusing. So you see where we're at. You can see how we're acting in here, right? Do not sleep on this, okay? This is really powerful stuff. You can see the complete descent of retail. Our wants are dropping because the market's killing us. So instead of buying the shiny new thing we want, we're going out and buying Clorox, right? We're buying soap to shower, things like that. We're buying detergent. Now, what's happening here? Well, you should be able to see it, but I'll draw it so you can literally see it. But there's a left shoulder, there's a head, and there is a right shoulder. Okay, so now you have an inverse head and shoulders of relative performance. If you break that, we're probably heading higher on the markets themselves. Cyclicals are not going to rally and leave the S&P behind. That's it.